Be strong.
Welcome back again to another episode of Wealthy Choices with Steve and Tyler. Today we are talking about the Canada Training Credit.
Yes.
Steve, what's that all about?
Well, you know, in typical government fashion, they had to roll out something and explain it in a way unlike any other credit that they've ever explained.
Okay, yeah.
It's like mind-numbing. In the office, we had to have an argument about how this credit worked and how to describe it to people because it's right?
Graphic.
Yes. Oh my gosh. So essentially, if you're between the ages of 26 and 65, you qualify for this credit.
Okay.
Sounds simple. On your notice of assessment, you may notice that you're going to have this credit that starts to add up at an amount of $250 a year. But you can only claim it if you go to school. Qualified secondary, post-secondary education. So it's like, okay, so if you went to school, there was always a credit.
Right. Yeah.
Right? You always got to claim your tuition. You always got to claim an amount for books, not the books themselves, but an amount for books. And those credits have changed over the years, a little bit how they're calculated. But this is now like this new credit. And the part is that it builds up. And they show like, oh, you have this. We don't have any other credit that works quite like that. RSPs would be the next closest example I can think of, where it's like you now have this extra room. Now, RSPs show you the room that you can put into RSPs. This tax credit is basically, if you go to school in an approved program at an approved school, this is now a credit that you can claim on your tax return to a maximum of $5,000. So it builds up at $250 a year, which would then mean what? It takes 20 years to get to, no, that can't be right. $250 a year times 4 is 1,000. 4 times 5 is, 20. It takes 20 years to get to the maximum credit.
Wow.
Yep. Starting in 2019, if you meet the eligibility requirements, you accumulate $250 towards the Canadian Training Credit limit of $5,000. Does that make sense to anyone? I'm like, all right, so this is something that you get. It's like it's an encouragement for you to go to school.
Right. Okay.
Right? So I think that's why they've laid it out like this, that they're showing that, hey, if you went to school, here's $250, or you didn't use it last year, here's $500, or you didn't use it in 3 years, here's $750, or you haven't used it in 4 years, here's $1,000 that you could save towards on your income tax because you went to school.
So how do they calculate that credit?
If you are at least 26 years old and younger than 66, you just automatically get this credit. It shows up on your notice of assessment. You have to obviously file a tax return. That's part of it. You do have to be, let me see here, you have to be a resident of Canada. So not a citizen, but a resident of Canada and filing a Canadian tax return.
And that was one of my questions too, is how do you receive the credit? Is it just on your tax return that you get that?
It's on your tax return because it's considered to be it's a new refundable tax credit. So refundable means you don't even have to have any taxes payable to be able to get this back, right? A non-refundable tax credit means that it's deducted from taxes that you owe. A refundable tax credit could mean I didn't make any money this year, so I don't owe any income tax, and I can still get this money back. But you do have to file a Canadian tax return.
Okay, so I'm a student.
Yes.
Can I claim both the Canada Training Credit and my tuition tax credit in the same year?
Yes, absolutely. The tuition tax credit is a non-refundable tax credit, meaning that the best it can do is lower the amount of tax that you have paid. It's never going to generate actual cash in your hand if there wasn't already money that was able to come back to you. Right? So income tax that you paid somewhere else on income, that was lowered through the claiming of the tuition credit. Where you could be a student with no income and therefore no taxes payable or refundable because you didn't pay anything in, and still get a check back from this program.
Okay. Can I transfer my unused training credit to another person?
Ooh, that's a good question. I think the answer is no. Is the answer no? Is it yes?
Let me find out.
Let's find out what the answer is to that.
No, you
'cause I don't-
cannot
you
transfer it to anybody. That seems to make sense, though.
Well, it does make sense, but I think the reason that they need to qualify that is because unused tuition amounts, right, the tuition tax credit, can be transferred to a parent, spouse, or grandparent, and so they wanted to make sure they qualified this because there is a different treatment, and because education, is used in both the names, and because they're both about going to school. Without knowing that, it could be confusing, thinking, well, I transfer one, why can't I transfer the other? And again, I think the reasoning is this is individual, and it's cash back potentially in your hand.
Sure.
Again, whether you're taxable or not, where the tuition credit lowers the amount of tax you have to pay on a given income. And again, that can be transferred to spouse, parent, or grandparent. Oh, here's something interesting. Accumulating the credit towards your limit. So this is not a credit. This is a credit that you get every year.
Okay.
Starting in 2019. But it's not a credit that everybody just automatically gets. You have to have had a total, you have to be between the ages of 26 and less than 66. You have to file a Canadian tax return. You have to be a resident of Canada throughout the year, and you have to have made at least $10,000.
Oh.
Now, that $10,000 could be made from maternity or paternity benefits, can be working income from a job or a business, and you have to be an individual who has not exceeded the top marginal tax bracket in the year. In 2019, that was $147,667. So you have to have made at least $10,000 and not over $147,666 to be able to qualify for the program in 2019. So it's a pretty broad range, but it means if you're not working at all, you don't get the credit,
right,
or having some sort of income. So income tax, maternity or paternity benefits. So again, the credit is really to encourage people in the workforce to a higher level of education. Take training, improve your skills. We're going to give you some money back for doing that.
And then I turn 65 and I can't get this credit anymore.
It feels different. It's described different than every other tax credit that we have. And that's where I think a lot of confusion is going to come in, which I suppose is par for the course when it comes to income tax.
Yeah, it makes sense. And that's why you're here to explain it to everybody, right?
Right. That's why we have this channel, and that's why we do the work that we do, because the team at the Tax Force does our best to stay on top of all of these things that affect you. And we want to bring this information to you so that you know that you can pay the least amount of tax possible and take advantage of all the tax credits that are available.
Well said, Steve. It's another episode.
Thanks for
Of
watching.
Wealthy Choices.
Be strong. Be strong.